Good morning, everybody. It's Chris here from Serene Education with the 4 Majors and Notes update for the 29th of May 2012. It's a beautiful Tuesday morning here in Wales. Long may it continue. We've had a whole week of fantastic weather. Love it. It's like being back home in South Africa all over. Anyway, back to business. Let's have a look at the euro on the daily chart. Let's see what's been happening the past couple of days. Very indecisive, and that's pretty much primarily because we've now broken through and we are testing the underside of a prior long-term support and resistance level here at 12,6,500. I'm just going to make it nice and thick so you guys can see exactly what it is that I'm looking at. There we go. Prior bounce here back in January of this year, and if I zoom out even further, you can see back in August, September of 2010 we had exactly the same situation unfold. A nice little support and a bounce occurred from that. Same thing over here happened recently. We had a nice bounce into this consolidation support that we saw back in January. However, that failed to materialize, and we saw this bearish engulfing and price reversed to the downside. And doing so, breaking below the 1265, very strong support and resistance level, and slowly moving to the downside with a bit of momentum. Since then, we've had a pullback. Past couple of days has been very unsettled. News filtered out yesterday on Sunday evening that the right-wing group in Greece had won the last voting that was put together, and they are pretty much in favor of the austerity measures that have been imposed by Eurozone on them. So before that, it was the lefties who'd got the prior votes, which were not really in favor of any more bailout funding from the Eurozone, which eventually, ultimately, looked like it was going to leave or exit. Now we have the other side of it forming, and sure enough, it's led to us having this slight pullback yesterday. Very much not a very convincing pullback, and that sentiment's still very, 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 very unnerving. And that it goes to show in all these very tiny or these small ranges you're seeing on these candles. Very, very indecisive, spinning tops, all happening at a under the price 12,6,500. As long as it maintains below that level, the ultimate scenario would be that we'd see a continuation to the downside. So, price on the Asian market last night testing Friday's close. This little one over here before yesterday. You can see this upside movement during yesterday's candle, moving towards that 12,6,500. However, at the end of play yesterday, not being able to to maintain those highs. Yesterday, a lot of the big boys were away. Bank holiday in the US, bank holiday in Germany, and France and Switzerland. So not a hell of a lot of volatility or volume yesterday to help really get a gauge of things. But ultimately what's going to happen is, as long as we maintain these levels below 1265, a prior long-term support, the ultimate scenario that will probably eventually occur would be a retest of this area here, a failure, which would be now price support becoming the new resistance, and the overall downtrend still being maintained. And we should be looking towards areas. I'm just trying to think, where else could we go to? Well, we had one way back here in 2010, roughly around the 1215, the 1500 mark. So there's a good 400 or 500 pips to that level. So there's still a lot of scope for movement. Another one we could use is probably potentially take the high of this candle here to the low here at 1265, the bounce that we saw up towards the 23.6 area, and then we could see eventually, just by plotting this fib extension level, you can see that the 50% line has been used quite recently over the past couple of days. Break below that would target 12,4,500 for any targets for daily as well as entry levels for our intraday traders. So a nice break below that going into the US session could ultimately sound the warning signs that we should be looking at 61.8 as our next potential target. I'm just going to zoom out so you can see where the 100% is, and funny enough, that 100% takes us pretty much bang to where we expected it to go to because of our prior long-term support after this break. So that's it, guys. Look for a break here below the 12,500 and a close. It's a nice little strong close on that, and we should be targeting the 61.8 level for the foreseeable future. Onto cable, and pretty much the same outcome for this pair over the past couple of days, showing us the same indecision candles, these little spinning tops. And yesterday's candle in particular, not a hell of a lot of momentum to the upside, and testing a prior long-term support and resistance level here at the 15,700. a noticeable area of consolidation over the past couple of months, and finding resistance at the upside. And the close of the US session last night, falling all the way back and testing those low points here. So more selling conviction on this particular candle than any buying sentiment. However, on the Asian session this morning, a slight trading range to the downside, but still very much indecisive as we see a clear doji going into the into the European session. But as long as we maintain these levels below 15,700, then ultimately we should be looking for continuation to the downside quite soon. If we, however, we see a nice bullish engulfing this indecision pattern here under this price support and resistance and getting above this level, then we could see price retargeting this price support that we saw here, this little hesitation support here at the 15,800, which bring it back to prior the institution moving average. At the moment now, institution and all the moving averages are above price, so that's dictating that we should be looking for further downside movement or bearish sentiment, nothing more than that. And most importantly, the CTC on this time frame, the daily, is looking negative across the board. Just want to get a gauge of where price is trading on this pullback. If you took the low here in February to the current last time high that we saw here at 16,300, you'll notice that price has pulled back since quite significantly, and you can actually plot these lowest points in your chart at this time frame to the highest point, and you can draw a fib retracement, and this will give you an idea of where price is likely to go to or pull back. You can quite clearly see that 23.6 here was attempted, and then we saw a noticeable support for a while, then a break, and a break of that did stem that we should look at potentially 38.2 as our next target, and sure enough it actually headed towards that. A break of that, and looked at the next potential level at 50 being the next target, and sure enough we've had a hesitation for 4 days at this level before break, and guess what? A break of 50, we would have targeted 61.8, and sure enough it's played out. So now we're looking at 61.8. Price has just gone sideways. That happens to occur at the prior underside of a support and resistance. There happens to be another one right here at 60. So almost a consolidation pattern here between the 1565 and the 15700. This could go sideways for a while. What we would like to ultimately see is the 61.8 or the area here at 1565 being breached. Nice bearish engulfing to the downside, engulfing this hesitation area here. That will then give us a clear indication that the ultimate sentiment is still bearish sentiment, and we should be looking at target areas to the downside. Between 61.8 and 100 there's quite a drop. However, if you plot a 78.6 fib, it's a fib, you'll notice that that comes into play around a previous support and resistance level. You can see that happened through the last part of December, November, December of last year. So, and that comes around the 15,4500. So get a break below this 1565, and sure enough you should have at least 150 pips, 200 pips, what do we get, 100, 50, 100, yeah, 170 odd pips to the next level here, and below that another 200 pips to the level below that. So there's a lot of scope for further downside movement if and when we get a breaking close lower than 1565. Moving on to the US dollar Swiss franc, good old Swissy. Here again, as I mentioned, we should be looking at that 9,600 as our first target or ultimate target, as price has been heading higher, and sure enough you can see it happening in real time. Look at that, heading into these areas here at the 960. There we go, and sure enough price now playing with the underside of it. We've had, this is going to our this is our fourth consecutive day that we're seeing hesitation at this level. We saw Monday, Friday and Thursday. Thursday reaching this area, Friday spending a bit of time top side. Same yet again. The sentiment seems to be, we've had pullbacks, but the sentiment still seems to be bullish on this overall, but we're still finding that 960 as a resistance level. What we do want to see is a nice break above that, a nice bullish engulfing above this level, which will definitely confirm that price is still seriously favoring upside momentum. As you can see at the moment now, and we took the start of this upside trend here at the early May, and the pullback we saw here, the 23.6 pullback of this upside extension, you'll notice that 50% is in play. Get above 50, we should be targeting 61.8, above 61.8, ultimately we should be looking at 100%, which is taking us way up here at the, what are we looking at, 9828 mark for this pair. And 9828, if you look at it on a bigger time frame, you can see back in will takes us back to this level here, price support and resistance, all the way back here. Hesitation, hesitation, a lot of hesitations through here. 161, another area here. You can see it takes us to another hesitation area that we saw back in August, September of 2010 and November. So you see how it all plays out with each other quite nicely. So get above this 960, then we've got more scope for upside movement. All the moving average below price, everything in favor. Fantastic setup for this pair. Blue across the board on our CTC strategy template. We could see the outcome being consolidation for the until further notice. We have to have a break and close above this 960 mark in order to get a genuine entry candle for further upside movement. Failure to do so could see a pullback occur, and we could ultimately, if that did arise, then we should be looking at the pullback levels are roughly around 23.6, the 38, the 50, and the 61.8, which will bring us back to the prior resistance level. Below that, then we should be targeting back here at 937-ish, break below that, and we should be looking at these areas here at the 161.8, back towards the 92200 mark. The last pair of the day is US dollar Japanese yen. Let's have a look and see what's been happening in the daily. Massive high, and we've been followed by a huge move to the downside, and almost cancelling all this upside movement that we saw from February right up to these 84 highs here, price support and resistance. Since then, we've seen retracement levels on the fib being targeted, 23.6, 38.2, 50, which happens to be a very strong support and resistance level here at the 80, and price actually played around with this 80 mark for quite some time. Loads of hesitation in and around this price support and resistance level, and since then we're spending more time below this level, which confirmed that we should be looking for negative sentiment to be ultimately the ruling this trend. And sure enough, if you look at the downside trend for this pair, if I make it nice and thick, you can see ultimately we've had lower swing, lower swing, lower swing going into this very strong support and resistance level. Ideally, we'd like to see him price bounce on this level here, because this was a breakout initially back here late February, and subsequently we had a pullback, a noticeable pullback over the past couple of months. However, we should or would have liked to have seen a nice bounce here at 80 to see a continuation to the upside in the direction of where the ultimate breakout occurred. That failed to materialize, and we saw this negativity, this bearish engulfing the entire consolidation range that we saw for almost 2 weeks. This candle here, this massive bearish candle here, cancelling out all this indecisive sentiment in and around the support and resistance, and since then we saw a slight move to the downside towards the 61.8 fib retracement area, and price bounce back up, failing yet again at this 80, and subsequently over the past 4 days, or 3 days in particular, leading up to this morning on the Asian session, very indecisive, small trading range, very little candle wick and bodies. So, and this is all happening on the underside of 80. So as long as that remains, then the ultimate overall sentiment is still negative. Okay, so only if we see a break and close higher than 80 would we start to think, well, maybe we could be looking at potentially a further upside move towards a 38.2, first target, second target 23.6, and ultimately back up towards the zero line, which happens to be the 8400. Until then, until such time as that occurs, we should be looking for bearish sentiment. So that would mean looking for entry levels to the downside. Okay, nice little consolidation here, breakout, would target 61.8 again here at 79.10. Break below that at 61, break below the 61.8, could target the 78.6 mark, which is another fib extension that's not added to this. I'll apply it for you. You can see here roughly around the 77.70 mark, which brings us back to prior support and resistance levels in the past. Okay, that will take us back below the institution, which means ultimately long term things are looking really, really, really bad for this pair. And if that was the case, I can assure you that the Japanese government will start thinking about putting in place austerity measures to try, or even intervening to try and push the US dollar higher. We saw intervention over a number of months in August of last year, a noticeable big up candle here. That was intervention from the Japanese banks, and yet again in late October we saw intervention which failed to really push those prices higher. So we could see, if we keep on heading to the downside, the more likelihood of seeing the Japanese government intervene, whether possibly with austerity measures or just really throwing some money at the issue. Other than that, just have a look and see what's out on the news today to see if there's anything out there that's going to really move the markets. Greece is still going to be on everybody's minds. Spain in particular is also another one. In terms of news, what do we have this morning? Well, we have the German prelim CPI month-to-month figures. That's an all-day event for Europe, Germany in particular. Then we have sterling CBR realized sales. That looks like a negative outlook overall, as a contraction, less spending on our. And later this afternoon we have the US S&P Composite 20 HPI year-on-year figures. That's looking slightly negative. The US CBR consumer confidence. That's going to be quite interesting. That one to watch at 3 p.m. GMT on the US is the consumer confidence figures. There seems to be a slightly more. The figure is slightly higher than the previous, which was a 69.2. They're forecasting a 61.8, so a 0.6 different. So if it comes out higher than that, then you're going to see that it could potentially be really good for the US dollar. Other than that, hope you have a fantastic trading day. Follow the rules of this strategy, please, guys. If you are using it, make sure you back it up with sound money management, guys. You might have the best strategy in the world, but if you don't have the right money management skills, you will end up losing, guaranteed. Okay, other than that, keep it simple. Make sure you follow the rules as I mentioned. Keep it simple. Don't overcomplicate things. It's only when you start to complicate your trading or overcomplicate your trading that you start making silly mistakes. Other than that, happy everyone, and I'll see you first thing tomorrow morning. Until then, trade serenely.